Is let's see the S&P 500, and you can see we are just really grinding our way higher off of this low right here. We then turned up on that minor cycle. This is still in a positive overall mode. No signs of any key high yet. You can see we have a fib right there at 49.51, and we are just a few points away from that level. Our next low is due 311 to right around 429 here in the S&P 500. If you go ahead and shift over to the daily timing, you can see, again, keep in mind really what the bias is. It should be quite clear. Yes, we have run quite a ways, but we have not had any breakdowns in trend, and are only seeing bullish translations both on these minor cycles right here, which are actually right-hand translations, in addition to that dominant cycle, right? So what is that saying? It says focus on what would change that. For there to be any signs of change, you would have to see a move through this rising 78.6 fib at 47.33. And obviously, we are really nowhere near that, as we are right now trading right around 49.28 as of the time of this video. And we have levels right here from 48.97 to 49.54 here in the S&P 500. That next minor low is due right around the middle part of February, so we'll be watching for a just minor pullback into that zone, hold all of our key zones on the downside, and then get a pop, likely still back to all-time highs here, prior to getting some risk to set in as we begin a pullback on that intermediate term time frame. Okay, as this next trough here in the S&Ps is only due out around mid-March. Here, if we go back to the weekly, that would be still on the early part of when this key weekly low would be due. Okay, so that's really what we're looking at here in the S&P 500 is a core both bull intermediate term and short-term bias. Again, hasn't done anything to violate any of our key levels here. We have a rising zone here from 48.38 to 47.76, and only a loss of this 78.6 at 47.32 would be a sign of change. Okay, but right now we still have a firm uptrend and are, as I said, holding positive cycle structures. If we go ahead and shift over now to the NDX, let's see that one. And we are watching for there to start to be some underperformance here in the NDX. Now, we have not yet seen it, but it is on our radar, as obviously we have seen a sizable move up off of what has now been a right-hand translation on that minor cycle that has yielded a new high, as the highest probabilities would have indicated. We are in this zone here from 17,409 to right around 18,309. And around this area is where we'll be watching for a peak to form in the NDX with a low that is due 311 to right around 429. In terms of our levels on the downside, they are rising, but it is 16,805 to right around 16,310. And then there is an intermediate term 50 right around 15,864. Keep in mind, these zones are rising as price makes higher highs. What would be a breakdown in terms of what is still a bullish cycle structure? It would need a loss of 16,249 on the NDX. If we go ahead and shift over now to the timing, there's a low that is also due here, 311 to right around 429. Let's go ahead and shift over now to the daily timing here. And what we see here on the daily is, again, still a series of bullish right-hand translations on each of these minor cycles that have yielded higher highs. We haven't seen any breakdowns in terms of our cycle structure. What about our levels? We have a zone here from 17,123 to 16,798. There's a 78.6 right at around 16,565 or so. A loss of that level would be a bearish warning, and then a loss of this old low here at 16,249 would be a breakdown on both the intermediate term and short term. Obviously, we are not anywhere near those levels quite yet, but keep them on the radar for signs of change. In terms of our levels on the upside, 17,880 to 18,025 here in the NDX. If we go ahead and shift over now to the RUT, let's pull up the intermediate term. Now this is still quite choppy here, as we have a low that is due 2.5 to right around 3.11 or so. There's a 38.2 fib at 1904. We had a perfect bounce off of that. What we're looking for is just really one more test of that low. If we go ahead and shift over to the daily chart, now right now we're still seeing a bullish translation happening here, as we have now moved through that 61.8 fib at 2006, a low here that is due 2.2 to right on 212. We're watching for a higher low to form and for this to hold. 1967 to right around 1942. There's a 78.6 at 1924. If it were to lose that in the short term, that would be a bearish sign. Right now, we are holding up fine. We would look for a pullback, then another test here on the upside prior to rolling back down. Okay, so what is the bias on the short term? Again, right now, still positive. Only a loss of that 78.6 at 1923 or so would be a bearish indication here. If we go ahead and shift over now to the VIX, and what's interesting here is that there's a low based on this black cycle, which is due 226 to right around 41. That is really how this is still acting right now, is for just really one more test down prior to turning up. Note that we haven't looked back at this low here from the end of last year. We're just holding sideways here, hovering near lows. That's not unusual as IVs get down into this 12 range. You don't really see them trade much lower than that. If you look back at history, it doesn't usually go a whole lot lower than 12 for very long. If we go ahead and shift over now to the daily time frame, you'll see that there's a low here that is due 131 to right around 214. We'll be watching for just really one more test down, and then for this to have a pop. This is overall in line with what we are looking for here in the NDX, which is some risk to finally come into the market after what has been just a monster run on the upside. We'll be watching for a little bit of a shakeup here as we get out into February and past what will be a very heavy news week here for the market.